Good day, you're watching Businessworld Live. I'm Angela Lagunzad.
And I'm Delos Santos. Here are today's top stories. S&P Global Ratings affirms the country's investment-grade credit rating, citing the economy's healthy rebound from the pandemic.
Renewable energy projects in the Philippines can now be fully owned by foreigners. This as the DOE eases restrictions on foreign equity in the RE sector.
President Bongbong Marcos says the government is close to achieving his campaign promise of bringing down the price of rice to 20 pesos per kilo.
And the Philippines improves in a global ranking that measures business bribery risks.
Let's begin our broadcast with S&P affirming its investment-grade credit rating for the Philippines, saying the domestic economy is rebounding healthily. The debt watcher says the BBB rating reflects the country's above-average economic growth potential. S&P also maintained its stable outlook, noting that it expects the economy to maintain healthy growth rates and that the fiscal performance will materially improve over the next 24 months. It expects GDP to grow by 6.3% this year, with strong domestic demand largely driving the expansion. But the credit rater warns that it may downgrade the country's rating if recovery falters. S&P says growth could ease in 2023 and high inflation could dampen future private consumption.
Meanwhile, the Energy Department says the country's renewable energy sector is now open to full foreign ownership. This as Energy Secretary Rafael Rotilla signed a circular amending the implementing rules and regulations of the Renewable Energy Act of 2008. A section of the IRR had previously capped foreign equity of RE projects at 40%. The DOE says the circular paves the way for foreigners to explore, develop, and use RE resources in the Philippines, such as solar, wind, biomass, and ocean energy. Secretary Rotilla says the easing of restrictions on foreign ownership will help the country achieve its target to increase the share of RE in the power mix to 35% by 2030 and 50% by 2040. At present, RE's share in the country's power generation mix is pegged at 22%.
The Semiconductor and Electronics Industries in the Philippines Foundation, or SAPI, is clinging to its 10% export growth target this year. SAPI President Dan Lachica explained that although export growth stood at 4.7% year-on-year in the third quarter, they expect this figure to climb further to 10% by year-end due to the holiday rush. Last year, SAPI exceeded its 10% growth target as total exports ended 2021 with almost $46 billion. That's up 12.9% from the year before. For next year, though, Lachica said SAPI may opt for a more conservative export growth target due to economic uncertainty and unstable market demand. Meanwhile, the Philippine Ports Authority reports that passenger and cargo volumes rose sharply in the third quarter as pandemic restrictions were relaxed. Passenger volume for the period rose 233.5% from a year earlier to 15.7 million passengers. Meanwhile, container traffic rose 9.7% year-on-year to 2 million 20-foot equivalent units or TEUs. Now, President Bongbong Marcos has arrived in Bangkok, Thailand to attend the 29th APEC Summit.
Prior to his departure, the president said he was optimistic that his promise of bringing down rice prices to 20 pesos per kilo is now within reach. Maricel Halili with a report.
President Bongbong Marcos believes that the Philippines is close to achieving more affordable rice. Recall that lowering rice prices to 20 pesos per kilo has been one of Marcos Jr.'s most notable campaign promises. During the nationwide launch of the Kadiwa ng Pasko project, President Marcos says that this goal will soon...
NFA kinukuha sa buffer stock, doon lang hindi kumikita ang NFA. Kung ano yung pinambili nila, ganun din ang presyo. Kaya't yung nakita ninyo yung bigas, 25 pesos.
14 sites were opened simultaneously across the country, including one in Mandaluyong City. President Marcos says they plan to set up more Kadiwa stores nationwide. After this, President Marcos proceeded to the Villamor Air Base for a pre-departure program. He is bound for Thailand to attend the 29th Asia-Pacific Economic Cooperation or APEC Summit.
We will be engaging with the leaders of the economies of the Asia-Pacific region to agree on how we can achieve food and energy, safe and seamless cross-border passage for our seamen and our other Filipino workers, economic inclusion of our MSMEs, women, indigenous people, and other segments whose economic potential remain to be unlocked.
Aside from economic matters, President Marcos said the leaders will also discuss issues on digitalization and climate change. President Marcos is scheduled to meet with King and Queen of Thailand as well as various business groups and the Filipino community in Bangkok. He will stay in Thailand until Saturday, November 19. For News 5, Maricel Halili, We Are One News.
Is the 20 peso per kilo of rice really achievable? And are Kadiwa stores really the way to go to fight inflation? That and more with Paolo Rivera, Economist over the Asian Institute of Management. Paolo, good day. Thank you for joining us.
Hi, good morning.
All right, first things first. How realistic is that? How reachable? 20 pesos per kilo of rice.
Well, the 20 peso per kilo of rice is not impossible, but there are a lot of things to work on for it to happen. Number one of that would be to augment the supply of rice in the country through agricultural development and ensuring that farmers are able to produce the necessary volume of rice that will allow the market to be able to reduce its price to the intended value of 20 pesos. But again, there are a lot of things to be done, and once we reach the 20 peso per kilo of rice, it should not be at the expense of other industries for that to happen.
And what's interesting also, this happens, of course, that remark happened at the launching of the Kadiwa stores. And what do you make of this particular program to help combat inflation? Is this even sustainable? I mean, considering this is also, of course, a repeat rather of what his father did during his time. So how realistic, how sustainable are Kadiwa stores? And is this really the way to go to actually fight inflation? We have monetary authorities from the past, calling for non-monetary interventions. Is this what you were expecting?
But the Kadiwa store is, for me, in my opinion, is a temporary relief for the rising prices, particularly of food commodities, because it would allow our poor countrymen to be able to have access to affordable rice, to be able to augment their daily needs. However, for it to be sustainable, it has to be approached in a sense that we should be able to attack it systemically by allowing the agricultural sector to be able to produce more, to be capacitated to produce rice, so that the Kadiwa store would just be a temporary relief rather than a permanent one.
Yeah, I would just like to follow up on that issue. Do you think there is a need to widen the scope of the Kadiwa stores, for now, to help shield the people from soaring prices of basic commodities? And what do you think of that? What could be the impact on this on our farmers?
Well, for now, the Kadiwa would work, but again, I'm not privy into saying that it would work in the long run because of our tight supply as of the moment of rice. And if this will be given to at that level of price, it might not be enough to be able to cover all the supply requirements of the country, which may be problematic unless the production of rice in the country would be sustainable as well.
Now let's talk about inflation, which neared 14-year high in October. Some project it to go even higher, especially after Paeng. Where do you see this is heading?
Well, I think based on data, inflation reports or inflation figures might not have yet reached its peak because we are not yet into the full season of the holidays, the Christmas. And as we all know, during November, December, there is a high demand from the Filipino people because of the holiday season. And as we know that with higher demand, it is accompanied by a faster inflation.
But do you have your estimates? Where do you see it heading? Do you have projections?
Well, for projections in inflation, it might, for the last part of the year, it might reach 7.5%, given the demand and the continuing supply constraints that we have, particularly on food commodities.
But when do you see that at least going back to expectations, 2 to 4%?
Well, as inflation returns to the expected or the healthy rate, no, it might happen in the first quarter of 2023, wherein demand would now slow down because we are now. I think we are still on a wait and see strategy here. So as of the moment, the 75 basis points would make sense in order for our economy to manage and temper inflation as well as manage further our currency depreciation. That's why in the previous weeks, we are able to see the exchange rate of peso dollar at around 57 to 58 compared to the previous months wherein we are averaging at close to 60. And this is an impact of the monetary tightening, the effect of the monetary tightening that has been implemented in previous months.
Now, you mentioned earlier the holiday season, and based on the reports, remittances jumped in September. What do you think drove that, and do you see that being sustained as we enter the holiday season?
Yes, remittances will continue to increase as we enter the holiday season. And the September figure is actually driven by the fact that, number one, schools have actually reopened in a face-to-face. And historically speaking, as schools open, our migrant workers, our OFWs, have been sending more remittances to finance the education of their children here in the Philippines. And it is in conjunction with the entry of the holiday season wherein spending of households in the Philippines are relatively higher compared to other months of the year.
Now, normally, the expectation when remittances are high, that's going to boost consumption. Is that still the same narrative now, given the high inflationary environment that we have? Or has inflation, in a way, weakened its power?
Well, because the currency depreciation, the dollar, is being eaten by inflation. So, despite the currency depreciation that the dollar remittances have been experiencing, the inflation is actually eating it up. Therefore, we can say that the consumption of OFW or remittance-dependent households would be at the same level before the high inflation and the currency depreciation. It just nets off.
Yeah, let's go back to President Bongbong Marcos, who is now in Thailand for the APEC summit. He's been on a traveling spree, attending summit after summit, but we have yet to see improvements, no, in the foreign investment pledges. What seems to be the holdup?
Well, for this APEC summit, other than these investment pledges that President Marcos Jr. would be able to commit, no, during his meetings, another holdup could be the discussion on food security with our neighboring economies, with our partner economies, in order for also the constraints of the economy to be addressed, such as food security, that will contribute to the slowdown of inflation, as what we have discussed earlier.
Now, lastly, before we let you go, and very quickly now, Paolo, what's your forecast here for growth for the fourth quarter after that upside surprise that we had in the third quarter? You now have some estimates pointing to a 5.5% growth for fourth quarter. What's your projection?
Well, my personal projection for the fourth quarter GDP growth would be at 6%, given the surprising growth of the indicates how sensitive and how powerful the limitations, despite the challenges, despite the calamities that we have experienced. We have seen in the third quarter that the Philippine economy is quite robust, no, given the challenges that we have. So I'm expecting a 6%, 5.5% to 6% growth rate for the fourth quarter.
Okay, healthy band at that, 5.5 to 6%. Thank you very much, John Paolo Rivera, economist over the Asian Institute of Management.
Thank you very much.
Now let's pause for a quick break, but coming right up after that. A House panel approves a bill seeking to establish an e-commerce regulator.
More of that and other stories when Business World Live returns. Stay with us.
You're still watching Business World Live here on One News. I'm Jess Delos Santos.
And I'm Angela Lagunzad.
The Philippines improved its ranking in a global index that measures business bribery risks. Now, based on the 2022 bribery risk matrix by the U.S. Business Association Trace, the country climbed to the 114th spot out of 194 countries. That's 5 spots higher than the country's ranking from the 2021 index. However, the country's overall risk score stood at 54, worse from last year's 52. Experts say the index may affect foreign investment inflows as investors tend to favor countries perceived as less corrupt. Experts also believe that corruption worsened in the country as a previous administration made it more difficult to speak about corruption.
Consumers more creative with their daily meals as prices of vegetables soar in wet markets. Mobile journalist Pamela Vasquez gives us the front seat to the story.
As prices of goods continue to skyrocket, consumers are having a hard time coming up with dishes to cook for every day. In Mega Q-Mart, nearly all vegetables have become more expensive. From 240 to 280 pesos per kilo, onions are now priced at 300 pesos. Per kilo, prices of eggplant have also doubled, while prices of Baguio beans, cucumber, and lettuce are now over 100 pesos higher. Vendors have this to say about the price increase.
Matapos ang bagyo nagtaas lahat. Dahil siguro sa bagyo, nasira ang mga pananim, nalugi sila, bumabawi sa meron.
Ronaldo admits that his budget cannot handle the expensive prices in wet markets.
Sa budget, kailangan talagang konting tipid talaga. Kaya alam ko anong kakainin ko, yun lang bibilihin ko.
Because of this, he was only able to buy a few items like fish, fruits, and vegetables worth 565 pesos. We tagged along with Ronaldo to see how he whips up something to eat with the few items he bought.
So sa ngayon, kailangan hugasan po na yung isda, then ipiprito ko siya para pagprito ko sa isda is going to paggisa ng sarsyado.
According to Mang Ronaldo, this will last him 3 days since he lives alone. But he hopes that prices of goods will soon go down so that he can buy more with the budget that he has. But until then, consumers like Ronaldo have to tighten their belts as economists expect inflation to remain elevated until year-end. Mobile journalist Pamela Vasquez, we are One News.
The House Appropriations Committee has approved a bill proposing to establish an e-commerce regulator. If realized, the E-commerce Bureau will be an arm of the Trade Department and will be tasked with promoting the growth of the online economy. The proposed bureau will oversee the entry of e-commerce businesses into the DTI's online business registry. It also seeks to support information sharing on the industry across all levels of government. The Internet Transactions Act is one of the 19 priority bills cited by President Bongbong Marcos during his first State of the Nation address.
And on some global updates, luxury Angela Lagunzad.
And I'm Jess Delos Santos. We are One News, all sides all the time. Don't go away. We'll give you the latest on the local bourse when Business World Live returns. Stay with us.
Now, Jess, investors cashed in on gains ahead of today's big-time rate hike. How's the sentiment like this morning?
Okay, as you can see right here, in fact, this is quite confusing. We've been swinging between gains and losses, at least for the main index. Right before we started, we were in the red, but as you can see right now, we're now at 63.92. Earlier, at least in the trading day, a few minutes after the open, we in fact reached 6,400. But as you can see right here, again, a bit of a gain here, up. Modest gain, in fact, very minimal if you try to take a look at those figures again at 6,392. Again, that comes ahead of the BSP meeting later today rather, wherein they are expected to increase rates by 75 basis points. That is to match the Fed's latest jumbo hike to maintain that narrow differential here. But this quarter so far, the PSEI is the region's best performing. That's as foreign fund inflows stretches 9 days so far, the longest wave that we've had since April of 2019. If you try to take a look right here, you'd see here quite a spell here, a series of green bars at the end of that chart, indicating, of course, that stretch of foreign fund inflows here. Jonathan Ravelas of EMBM saying, this could indicate local equities and the local currency could actually have bottomed out or are near bottom. The comeback is a bet that there's less downside risk for stocks and that the peso, as inflation may have in fact already peaked. We were talking to Paolo Rivera earlier of AIM. In fact, he did say, we have yet to see inflation peak, but he does say that, we are expecting price pressures to actually temper by the first quarter of next year. And very quickly, let's try to have a quick check of the peso. As you can see right here, a bit of a weakening here, 57.512 to the greenback rather.
Now, moving on to one broadband provider, it seems to be riding on the main bourse's gains. Is Converge extending that tally?
Okay, let's try to see. Not quite, at least at the start of the trading day here. As you can see, Converge now at 14.96 here a piece. That's down by 0.8%. But looking at this chart right here, over the past 5 days, if I'm not mistaken, you'd see here Converge gaining 24.67% so far, at least over that 5-day period. The stock is up. That's a record since Converge began trading in October 2020. While Converge third quarter earnings actually disappointed due to lower than expected subscriber base or take-up rather, the stock remains a buy, at least according to COL here, because of cheap valuations. Note, however, that so far this year, Converge has been one of our worst performers. And having said that, let's try to have a quick check of our leaders and laggards for today. Again, ahead of that meeting by the BSP, you can see here URC making quite steady gains here at the start of the trading day, up by 2.8%. A number of rate-sensitive stocks here also in the green, the likes of Ayala Land. However, on the downside, you have ICTSI and SM Prime, worst performers so far at the start of trading day this Thursday. And that's it for today, November 17, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess de Los Santos.
And on behalf of Danny Laurel, I'm Angela Lagunzad. Thank you for having me. Stay
Thank
safe,
you.
Philippines. We are One News, all sides, all the time.